Welcome everybody. In this video, I will show you how to make better trading decisions. Because, as always, I have a systemized process. I never go with hunches, with hopes, with fears, with whatever nonsense. No, I need structure. After all, I'm from Germany, all right? And that little bit what's left of the German culture, I took it when I left the country and I apply it in my trading. I have structure and I have clarity, I have robustness, and it works. So let me explain to you how you make better trading decisions. Here we go. So let's start with number one. The first thing we do is we search for the opportunity that has an edge. Very important. I always talk about a statistical edge and the 7 building blocks. So here you have the 7 building blocks one more time. And of course, it needs to be a back-tested plan, right? Even though it has a little typo here. So fix. Nobody saw this, right? 7 building blocks. Market phase, price location, entry pattern, time of trading, additional confirmation, risk management, trade management. And even here with examples, do you have a bearish or a bullish signal on 1 hour chart? Like decide the market phase. The price location, the entry candle will have to touch the ADR levels, for example. Entry pattern, limit order at the ADR level. This is a simplification, by the way. If you try to copy that and put it into action, you will not be successful. So don't even bother. Create your own shit. Stop copying somebody else, okay? Time of trading. Set limit order 30 minutes before London session. The time aspect is so forgotten by so many people that there is repetitiveness and statistical relevance in when you trade. And also delete all limit orders after New York session. So clearly you will only you select a narrow time band that you only want to interact in. Additional confirmation. We can use trading sentiment for further trade confirmation. We could use the alpha trend indicator. We could use like a bunch of things, could be COT data. Something that will give me an additional confirmation of the direction. And then risk management. Stop loss 1.5 ATR on a 1 hour chart, right? Very simple. Move trade to break even once 40% of the target has been reached. That goes also into trade management, but it's essentially, those are very much intertwined, right? And the trade management, exit the trade once it hits stop loss, take profit. So essentially, in this example, you do not have any complexity on the trade management side other than once you have 40% of the target reach, you go to break even. So you don't lose a trade anymore. So this is identify the decision, number one, okay? Let's go to number two, gather information. What are other outside factors that can give me more information about this setup? We could look at it fundamentals. Is there anything on the calendar, right? Is there a central bank meeting? Is there retail sales? Whatever, like the things that really matter. Is there a speech? Is there an election? Like obviously this is very, very obvious stuff, but you also have to look into the smaller fundamental factors that play a role. So don't forget about those. And then also check seasonality performance. I definitely look at seasonality, and there's tools that help you with that. Again, I don't weigh it as much. It's not a priority per se, but it's still a relevant factor that you can use. And then, of course, you look at your data-backed decisions. Right? What have you done in the past? How did it work out? Which of these combinations have you used? And so on and so forth. So this is gather information, right? First, you start with identifying the 7 building blocks, and then you gather the information, okay? Now, let's move further up here to the side. Number 3. Identify alternatives. I believe that's something that so few people actually do. They just, laser focused on one thing and they don't even realize, but wait a minute, maybe I could adapt that same trade idea on a different market or a different time or, let's just say, is there an alternative? So make sure to check all trading opportunities that have been presented, but don't take any trades just yet. You could look, for example, also at strongly correlating other pairs, right? Let's just say you want to trade euro-dollar, but then you look at, well, look, euro-yen is more or less the same trade, but has a much nicer structure, or doesn't have, let's just say, a fundamental implication as much. So Try to widen your scope. Look outside of your box that you're only trying to focus on right now to related other alternatives. So identify alternatives. By the way, why do we employ that process? We employ that process because it widens our way of thinking. This becomes our nature of making decisions and going to market, okay? So here we have examples. For example, look, this here is... These are two different Swissy franc opportunities, right? So what we're seeing here are two different Swiss franc opportunities, right? So again, identify the alternatives. Number 4, weigh the evidence. That's another thing where I believe a lot of people really have trouble with. So as you make your decision making and as you have a bunch of data, let's just say packets that are there, then you need to decide which one is more priority over another, right? And this is really important that you do that because over time you also develop, like a quick understanding of what should you pay more attention to, what is something that does make your signal stronger or weaker only, but doesn't necessarily make it or break it only. That's important. So weigh the evidence. Look at the fundamentals, seasonality, performance, data-backed decisions, trading plan, right? So from all the information you collected, what holds the most weight? What is the most reliable, most important part of it? And imagine it like a checkbox. Which trade has the highest likelihood of playing out? And I show that also in my track record strategy. So I have trades where it's a 10 out of 10 setup, where I'm really, really confident about the trade. Then usually when I see those, then my trade management will be less tight. But sometimes I take a 5 out of 10 setup, a 6 out of 10 setup, and then I will secure that trade faster, or I will have a smaller target for that trade in the first place, okay? So this is how you dynamically adjust by weighing the evidence that is in front of you, okay? It's really not that complicated. Come on, I mean, everybody can understand these things. And then choose among the alternatives. Choose the trade that has the highest probability. Double check your sources and trade plan. Write down the plan for moving forward. Basically the trade management, what I just mentioned, right? Like how are you going to manage the trade also based on the data. And you can see right, we had these two different Swiss francs here. So this one is actually a short. This one is a long, right? And you could say this here, just from the naked eye, is a lot more sideways, right? And okay, we had a good recovery here, but essentially, just from a simple market structure, this one broke that low. So this move up is not as much intact. Whereas if you look, Whereas if you look at this one, you can clearly see that the structure down here is a lot more intact. So just from that very simple observation, it's more or less the same trade. You're looking at a Swissy franc trade here, but you can say this market structure is a lot more inviting than this market structure. Oh, sorry, man, this mural stuff sometimes makes me crazy. But you understand what I'm saying, right? I mean, it would take a really blind and stupid person to not understand what I'm saying here. I hope you're not one of those. And nothing against blind and stupid people, I'm sorry. So let's move on. Maybe trading isn't for them, though. So choose a trade that has the highest probability. In this case, obviously, just from the simple market structure direction. And if we look at the Swiss franc as what we're singling out as a trade opportunity, this looks better, right? And then we go to number 6. Pull the trigger. That's another thing. How many times have you sat in front of a screen and said I'm going to trade. And then the opportunity comes and say no, I'll wait for this candle, for that candle, for, you sort of not doing what you wanted to do. And then before you know it, the fucking opportunity has vanished, right? Again, as you have the structured approach, process-based, data-based, based also on your past experiences and again data, and a plan that you develop with the statistical edge, with the 7 building blocks, you training these things, then you will execute and pull the trigger with ease because you've done it millions of times and you also worked your way to earning the ability to pull the trigger with ease. That's what I always keep saying about what I mean when people say, fake it till you make it. You cannot do that in trading. You can try, but in these moments when it's just you and the market, you will sit there, should I click? Should I not click? Maybe I'll scroll a little bit more on Instagram and look at some stupid memes. Screw that shit, Become a capable, confident trader by employing processes like these. Get it? I mean, if you don't, then maybe you should work in a kindergarten or something. Which is nice, by the way. I like children a lot. But trading is a tough game. You don't accept that, then it's your problem, not the market's problem. And if you're on the other side of things, reckless, you're just gonna blow up. Just because you're, oh man, like I have a strong psychology. I am never afraid. And this is why I take stupid risks and get fucked. This is maybe even more stupid than being too afraid. Honestly, guys, of course I'm exaggerating here. But am I really? Am I really exaggerating here? Isn't that what happens to most people? I would say yes, by the way. Don't let that shit happen to you. You don't need to. You can see it here, right? And then as you execute your trade with correct risk management. You put your trade management in place. You know exactly which size you're trading, what percentages you're risking, what your targets are, when and how you will actually move your stops and you take profits and all of these things. And then boom, you just fucking do it. Okay? And then number 7, review the decision and journal. So did the trade do well? Well, yeah, obviously this trade is my trade. Of course it did well, bro. No, but you see here, profitable trade. Super nice. This is how it works. And then obviously you have to journal. Why do you need to journal? Because especially as it's fresh, you write down, okay, I made that decision. I was confident. I wasn't so confident. I thought this was a 5 out of 10 because of this and that and that. I hesitated in this moment, or maybe I went too early. I should have waited for a close of a certain candle or not. Like, write down the DNA of what happened there. Basically between the lines, what happened there, the magic of that moment. You need to take notes of that, because this is what you will need to review on a consistent basis, typically on a weekend, in order to understand, are there patterns in your behavior? Is there something that keeps you from being confident enough more often than not, or repeatedly, or the other way around? Is there something that encourages you to be stupid more often than not, or often enough? So you have to be honest with yourself. Again, we're back to why trading makes you the strongest and best version of yourself, mentally especially, is because you will have to face your own demons, your own shortcomings, your own perception, your own decision making. But when you do that, and again, you work with data. You create your own journal data. It's not some idiot telling you some shit, not even me. Maybe I'm the idiot. It's you. You trust yourself. And isn't that actually the greatest gratification that you can get from trading in the first place at all? You know what you can, you know why you can do it, you know how you do it, and you just become better and better and better as you refine that process. So this is just a simple 7-step process for you of how to make better trading decisions. And if you follow that, and you're not getting better in your trading decisions, then shoot me, all right? All right. But if you make better trading decisions because of that, then do me the favor, give me a thumbs up, like this video, share it, subscribe it, tell it to everyone you know that actually trades, so that we can get this information out to fucking everybody, okay? So, I'll see you in the next video. Thank you very much.